Coming to our income tax class. From today onwards, we are going to discuss about computation of deductions. First, we will see the deduction under section 80C. Then we will switch over to the next topic, deduction under 80D, 80 triple C, CCD. Like that, we will discuss the deductions. While discussing the chapter called deductions, simultaneously we will also solve the problem on computation of a total income, because deductions are applied only after calculating the total income. So what we have to do, total income minus deduction, balance is taxable income. After getting the taxable income, we have to calculate what is the tax liability on the income so calculated. This is the process we should do. Okay, so first let us see the deductions under 80C. Already I told you, deductions under 80C is meant for some specific investments and payments savings. For example, say I got the housing loan, right? I purchased the house based on the housing loan. What the amount of EMI I am paying periodically, right? Need not be only on monthly. Periodically, what the EMI I am paying against the housing loan based on the conditions, the principal portion is eligible under this 80C deduction. Then, what I have purchased under the category of National Savings Certificate, National Savings Certificate 8th issue, and National Savings Certificate 9th issue, that is also eligible. What I am contributing the amount for provident fund. Okay, for all those provident fund, the own contribution is eligible for 80C. Employer contribution is considered as a income. Okay, for PPF, only own provident own contribution we are having, no employer contribution, whereas SPF, RPF, etc., PPF, etc., only the own contribution is eligible for calculating the total amount of deduction under 80C. Then life insurance policy, what the amount of life insurance policy we are having, for which what we are paying as the premium. If the policy purchased prior to notified period, then 20% of the policy value is maximum amount. Then after that notified period, 10% of the policy value is eligible to claim as deduction under 80C. Okay, and for mind it carefully, this is only for life insurance policy, right? So what, for whom it is eligible? Life insurance policy taken for own life, for the life of the spouse and children. Okay, then it is eligible to claim as deduction under 80C. Minded, again, if want you please underline it, it is own it is life insurance policy. Life insurance policy taken, for which what the premium you are paying, that is eligible, the amount of premium paid is eligible. Whereas if that medical policy taken, health policy taken, for which you are paying the premium, that is not coming under this category, this section called 80C. Okay, so now let us go to that problem. This is problem number 1 and taken from another other textbook, which is Income Tax by Dr. Preeti Rani Mittal, published by Sultan Chand and Sons. Because in our textbook, no separate problem specifically not available for 80C. That's why I have taken the problem from this textbook. So first one, repayment of loan taken for construction of residential house 1 lakh, out of which 60,000 is interest. So please listen very carefully. Any amount of interest on housing loan paid is eligible under house property income under section 24(2), whereas the principal amount of the loan principal amount repaid against the housing loan, that alone is eligible here. Okay, that amount alone is eligible. So interest paid goes to, please understand carefully, interest paid goes to the house property income, whereas principal amount repaid, that will be considered for ATC deduction. Then another one, accrued interest on NSC. What is that NSC? National Saving Certificate. In that national saving certificate also, that notified recent issues are eligible. So two things, national saving certificate, national saving scheme, right? Both the things are eligible for claiming under ATC deduction. Here it is given as contribution to national saving certificate accrued interest, then it is eligible for 4000 rupees is given, it is eligible. LIP on own life. What is that LIP? Life insurance premium on own life. Yes, life insurance premium, just now only I told you, life insurance premium for own life, life insurance premium for the life of the spouse, for the life of the children. All these three categories are eligible. Here, life insurance premium on own life of 30,000 is eligible. Then next, life insurance premium on brother's life. See, that one is not eligible. Why? Because it is clearly defined in the income tax what is family. Who are all the persons coming under the category called family. So we have to take only own life or the life of the spouse, and the children are eligible under life insurance premium for ATC deduction. And the life of the brother, whether dependent or not, that is different, not eligible for this category of ATC. Then another one is contribution for recognized provident fund. Mind it carefully. Recognized provident fund, if the employer is contributing amount for your benefit, is coming under the category called income in salary, where all the provident fund, statutory provident fund, statutory provident fund is fully exempted. So recognized provident fund, and another one is PPF. PPF, no employer contribution. So only for this recognized provident fund, employer contribution is eligible, considered as a income. Whereas for all provident fund, own contribution. What is that own contribution? Basically, you know very well. You studied in the chapter called salary. For a provident fund, as an employee, I am contributing one amount, and my employer is contributing one amount for my benefit. So it is a income. What the amount I am contributing, it is taken as a own contribution, right? What the amount I am contributing is a own contribution, and it is not a income, it is my saving. So it is eligible under ATC. The total of these things that comes to 1,09,000. What is the total maximum amount for ATC? Maximum amount is 1,50,000. So we have to take the entire 1,09,000 as the qualified amount. So gross total income minus ATC 1,09,000 as far as this problem is concerned. Balance is taxable income. Okay. And one more point you should know in this category, ATC is 1,50,000 maximum, and ATCCC, ATCCD, all those things that overall aggregated deduction is also 1,50,000, should not exceed 1,50,000, right? That should also you should keep in mind. Just for the sake of information, I am telling this. Okay. So maximum amount of 1,50,000, whereas here that comes to 1,09,000, so it is eligible.